What's up, everyone? Figured I would jump in and do a quick Sunday watch list for you all going into next week, considering we had so much crazy action last week in both the small caps and the big caps. We're going to be covering all of the main names, of course, the meme stocks like AMC, Hymc, the overall market, S&P 500, as well as small cap runners like Lgvn and a few others that we're going to be talking about later in this video. But first, I want to give you a little bit of context of what I've been looking at, what I did last week, so you can better understand why I am preparing the way I am going into next week. We'll also be focusing on a lot of small cap plays that I'm looking at and talking about the key levels that you need to have on your chart so you're better prepared to make decisions and trades once those levels hit. If you want to see more breakdowns like this, let me know down below. And also, if I missed any stocks that you're looking at, share it with us as well so we can all be better informed. Now, before we jump into it, I have to say I am not a financial advisor. Nothing in this video is a buy or sell recommendation. Trading is very risky. The markets are very risky. Make sure that you understand the risks associated with getting into the markets. There is nothing guaranteed at all. These are just my ideas and what I'm looking at going into next week. Also, I have so many imposters on Instagram and Twitter. I will never reach out to you for crypto investing. I will never offer to invest for you. Number one, that's illegal. I can't even do that. I'm not registered. Also, I will never reach out to you on Instagram, on Twitter, anywhere about investing for you. Number one, that's illegal. I can't do it. I'm not a registered broker. But number two, I just don't want to do it. I don't have time for that. I like to do my own trading. Okay. So I will never reach out to you soliciting for any type of purchases of crypto or whatever. My only account on Instagram is Tony Ivanov _ and also TradeBuddy __. Okay. I will not reach out from anywhere else. Make sure that you pay attention to the URL. Pay attention to the username and don't get scammed. All right. With that being said, let's get into the watch list. So real quick, before we talk about next week and what my plans are, I want to give you a bit of context of what I did last week, especially what I did with AMC and Apple and how I kind of view what happened last week with your overall market and how that's going to affect us going into next week. So firstly, we have to talk about GME and AMC, right? I mean, obviously, these things have been running like crazy. Ever since March 14th, we really saw the overall market just go on a crazy, crazy rally. And you'll have some people saying that, you know what, the market's, back into a bull market. Inflation doesn't matter. The Russian invasion doesn't matter. Everything's fine and dandy. But I view it a bit differently, right? The way that I see this is that it was basically just a bear market rally. And this is important to understand from a psychological point, and I can break it down as best as I can in a few minutes. But basically, overall, right, everyone has been so scared of inflation. It's been very clear that we're seeing massive levels of inflation in the US economy and worldwide as well. And this was kind of turned up to a 10 back in February once Russia invaded Ukraine. And this caused massive widespread panic in the markets. You can look at any sentiment analysis for like social media on like Twitter or Reddit. Everyone was bearish SPY. Everyone was selling, everyone was panicking, and everyone overall was very, very convinced that the market would go lower. And you could see this in the charts too, because if you look at SPY, we broke down into new lows on February 24th, right? We had this massive sell-off leading into when everyone was pretty much sure that Russia would invade, right? We had this massive selling from the 450s all the way down to the 425s. And then boom, on the 24th, I think over that weekend, Russia did invade. Now there's a concept in the market called buy the rumors, sell the news. And the best way that I can put this is it's more of like sell the rumor, buy the news, where everyone was selling in anticipation of this Russia invasion. And then when the invasion happened, right, everyone sold, everyone panicked, but the market recovered. And this is important to understand because what this does is you have to get that most people, most traders are very impulsive and most traders are losing, right? So most people make the wrong decision when it comes to the markets. And basically the best way that I can illustrate this is that in this candle, right, as we broke down that previous day low of 420, because everyone, is panicking because of the Russia war. Everyone's sold, right? Everyone's going short. Everyone's buying puts because they're so sure the market's going to go down. But then the market bounced, right? The thing freaking shot up like crazy. And this traps people, right? This had made what's called a bear trap. So what happened from there, right? We kind of bounced up. It stopped at 440, it came back down, right? Everyone who still thinks the market's super bearish, they're going to panic, sell, sell, sell. Once it gets down to the lows, right? All of the, most traders are going to want to sell at the lows, expecting it to break down because, most people think that they can predict. So they like to base their trades in the idea of predicting the future. So when they see it down near support, instead of risking the support hold, they're gonna sell, anticipating and predicting the further breakdown. But then on March 14th, we bounced, right? We found that bottom, it bounced up, and then since then we've had this crazy rally. Now, all this rally is, in my opinion, I don't know for sure because there's no way to know, but the way that I see it psychologically is it was all just sellers getting squeezed out. Number one, you have all the put buyers who are going to be selling for a massive loss. And also you have all of the longs, right? Because everyone likes to talk in the context of like a short squeeze. But overall, a long who sells and a short who sells, they're fundamentally doing the same thing. They're selling because they think prices will go down. So let's just keep it in the context of longs that sold the panic, right? So imagine you have all these longs who sold on the Russian invasion. They sold into the lows. Once they start to see SPY bouncing, and all these articles are coming out left and right about how the market's bouncing, how Apple's running, 5 green days in a row, all this craziness, everyone talking about GME, AMC running. Eventually, this is going to bring back in those FOMO buyers. Everyone who sold previously is going to be forced back in. Number one, shorts are forced back in because if they don't cover, they're gonna lose massively. But then also you have all of the longs who don't want to miss out, right? They don't want to miss out on those higher prices, so they chase it back in. And this pretty much turned into like a blow off top scenario, really exacerbated by the meme stocks running. And we saw all of these plays just run into massive previous levels of resistance, right? If you just look at SPY, if you just zoom out to the bigger time frames, and I'm talking monthly chart. If you look at the monthly chart for SPY, we overall still have massive resistance, right? We have all of these bag holders. One sec, let me get back here. We have all of these bag holders, and realistically, this chart is still overall bearish, right? We have all these levels of potential resistance at 451. We had levels at 455 and also at 459. And those are the levels that finally got rejected as we saw the market kind of go into that blow off top. So with that in mind, that is why last week I bought puts. I bought puts on AMC at $33, and I bought puts on Apple at, 179. Both of those I had expirations for Friday. Now AMC was great because if you just look at the broader chart, it was just a brain dead, very simple trade to take. What everyone fails to do whenever they're trading stocks is they fail to consider the bigger picture, right? They fail to consider the broader price action. So while everyone is focused on the fact that it's running over the past few days, what they're ignoring is that we have massive levels of previous support. And this is important because, like I said earlier, is levels of previous support, there's bag holders. There's going to be people who bought at those prices who, if they see it, go back to break even, they're going to be very compelled to sell for that break even and recoup their losses. So this was just like a kind of A+ setup where I know that the overall market is most likely running just based on this bear market FOMO rally. And that rally had caused AMC to run into that very significant previous support of $33. And there's a very simple saying in the market: previous support becomes new resistance, previous resistance becomes new support. That's like the basis of my trading. And it was just a perfect scenario on Tuesday because we saw this massive euphoric rally at market open, and the stock just spiked up right into $34. When I saw this rally out of the gates, I knew it wasn't sustainable considering everything I just said, and I bought puts at $33. And I pretty much held those. I took profits here and there, but I finally covered those puts down in the 2270s. Now you might ask me, why did I choose to cover there? Once again, using the broader time frames. Here, using the hourly chart. Once again, previous resistance is likely to become new support. So until we get down to that price, there's really no reason to take profits, right? Just have to stay patient, let the trade work. We had a bit of fighting on Thursday, but overall I was able to hold through that. And then we had that final flush. This was great because of, everyone got even more trapped up by the GameStop reverse or the stock split news, which number one is not confirmed. Number two is being voted on in, I think, June. And number three will be done by a dividend, which doesn't really make sense. So that was just like a perfect piece of news to trap many more buyers who just don't understand how the markets work, flushed all them out, brought it back down to support. So similarly for Apple, I bought puts on Apple on Wednesday. Very similar idea, right? We had a very significant previous all-time high on the weekly chart was at 179.40s, right? That was the previous weekly chart all-time high. And considering that this is all just a bear market rally, once I saw it test that level and reject it, it was very clear to me that it was time to buy puts. Also, if this was really strong, then it should have been able to hold that previous hourly chart level. So let me just zoom in here. If it was really strong, it should have been able to hold this level at 179. You see this hourly chart level? If it was actually strong on Wednesday, it should have broke out through that and held it, but it failed the breakout. So whenever I see something like this, where number one, we're running into historical resistance, and number two, there's a failed breakout on a smaller time frame, that is when you use previous resistance as resistance again, short into it, write the thing on down. And then I covered this down at 172 right before the bounce, which was very awesome. So with that in mind, right, I'm not really looking at anything in particular for AMC or the overall markets. There was one play that I missed, and that was just the bounce on AMC. I technically played it by, like covering my puts, but the best place to take a risk on AMC that I see was just using that previous resistance as new support. Now we can go down and actually test. If it does test like $22 or 21.70s, I'll buy some calls just because it's at the level. But other than that, if it bounces up, I'm not going to chase it. I missed the trade, and that's that. Similar thing for SPY. Overall, I do think we are still very bearish, but we had such a big pullback that I expected to see some sort of bounce, and I'm not really ready to make a decision to reshort quite yet. So that's kind of the breakdown for the broader markets. Now I want to go into the small caps because that's obviously where my bread and butter is. And I want to talk about Lgvn because Lgvn is a very important one that really until after hours on Friday has shown no signs of weakness. Now this is very important to understand because most people like to trade just the single day price action, right? So they look at this and they look at it just like this. And if you just look at Twitter, you can see all the short sellers charts, they're just like this on the 1 minute, and they're just shorting this because it's below VWAP. It had a week open, they're shorting VWAP, and they're playing this range. But what they're failing to understand is that this is a multi-day mover, and everyone who sold on Thursday was still trapped. So I played this on Friday because I was kind of late to the game. But you can see we had very simple previous resistance as new support. And I went long, and I'm still long in the 1380s. I took some profits into the 15s, but overall I'm still swinging. We did see a sign of weakness though, because if this was truly still strong, then once it broke out in the afternoon or tried to break out, it really should have been able to hold that 1560s as new support. But you can see we have a little failed breakout here. So this is the first sign of weakness. It doesn't mean that it's topped out completely, but it's the first sign of weakness. So what this means is that going into Monday, depending on the pre-market action, sellers overall are going to be very confident to short that area, right? They're going to want to short that previous resistance as resistance again. So like I said, it doesn't really mean it's guaranteed to be breaking down, Overall, it can still hold 1375 as support and trap all those new shorts. But overall, I do believe that it's most likely going to reject that market open, and then it's going to be up to the bulls to see if it can hold. My plan for it, since I have a position, I will most likely be locking in a lot more of my shares into that potential backside, but I will still hold some overall as long as it can keep holding 1375. But that's the first real sign of weakness that we saw, because if you just look at the past few days, there was not a single time where the hourly chart failed to stair step. This is the first time. So it's up to the bulls to see if we can push it further up. Also related to AMC, obviously, is HYMC. This is also one that is a very strong watch for me. Really, it's kind of a messy chart. If you look at the candles, right, we have lots of volatility here. I'm going to choose to ignore this big red candle and focus more on the line chart. This is usually what I focus on almost all the time. And we have a very strong possible previous level of resistance that can hold as new support. And that's right near $2. So that's really the only area that I would really have any confidence to take the risk to go long, because it's based off of technicals. Now, obviously, HYMC is tied to AMC. It is really going to matter what AMC does going into next week. But overall, if we see HYMC retest $2, I will most likely be taking some risk there and taking some trades. But that's pretty much all I see for HYMC. Also, MULN is one that everyone is kind of looking at. MULN, I'm really more focusing on the bigger picture. And right now, I really have no reason to be bullish. I know they have some, potential news. The CEO came out last week and said that a larger car company is planning to buy their vans. But so far, it's just a rumor. I'm not going to really buy into it. They do have lots of dilution on the table as well. So really, until it shows me a solid breakout above this 350 level, I'm going to be more on the side of being bearish. So we're going to probably see some bounces here and there, but ultimately, until it breaks out of this range, I really have no edge to trade it long. So it's just one of those things where, even if a stock is moving, you don't have to trade the stock just because it's moving. You have to really focus on trading a strategy. And right now, there's really no strategy for me to trade on MULN. Like I said, that will change if it can break out over 350. I'll look for a dip buy back down into 350s as support. Also, another one that I'm kind of keeping a close eye on is DLPN. This is more of a crypto NFT name. This one had a very strong breakout on Friday, some nice breakout on the average volume. You can see on Friday, it traded 1,000% over its average. And this one, very similar to the rest. My main strategy that I see is just looking for the pullback to retest the previous resistance as new support. And that's somewhere in the 540s. Now, of course, with all of these levels, right, there's no guarantee that they're going to hold. There's no guarantee in trading at all. But that's the point where my strategy sees the lowest risk possible. And that's where I'm confident to take that risk. If it doesn't hold, it doesn't hold. But my overall approach to it is I'm not trying to predict the hold. I'm not trying to predict it to continue upwards. I'm not going to wait for confirmation. I just buy at the level. If it holds, great. If it doesn't, I plan my risk ahead of time so that no matter what, I don't risk more than 2% of my account if the trade's a loser. But DLPN, not as much crazy volume, but it did have a really strong spike in the afternoon. And if it can pull back and retest, like maybe the previous day high levels, like in the 560s could hold, but ultimately the main place I would have confidence is going to be those 540s. And that's pretty much all I really have for now going into next week. Honestly, a lot of my scans and a lot of my watch list is created in the morning in pre-market because I'm, long biased. Sometimes I buy puts on bigger companies, but I'm mainly a long biased small cap trader. And lots of my plays are based on the first green day moves. So really a lot of my plays do come from the morning. So these are what I'm looking at from last week. But of course, this is subject to change. There is no guarantee for any of these plays. If you are looking at them, make sure that you understand the risk of getting into them. Make your own plans, obviously, and manage that risk. Like I said earlier, if you have any other ones that you think I missed and I should look at, let me know down below in the comments. I'd be happy to look at them. If you are active on Twitter, I am really active there recently. I'm posting almost every single hour, especially during market open, of all the stocks I'm watching and all of the trades I'm taking. You can see last week I posted when I shorted AMC, I posted when I covered AMC, and I broke down my ideas for shorting Apple when I took the short. And then I also posted as it was progressing and just thoughts there. So there's a lot of free content and lots of great analysis there that you can get. So make sure to go follow me on Twitter. With that being said, if you enjoyed this video, please do me a favor, give me a thumbs up, it helps me out a lot. If you'd like to see more content like this, hit the subscribe and let me know down below what else you want to see. And I appreciate you guys watching this video, and hopefully you stay safe in the markets next week.